All right, everyone, Assalamu alaikum and a very good evening. On behalf of NCM Group and Noor CM Academy, we would like to welcome aboard. Thank you so much for your participation today. This session is being broadcasted from Kuwait. NCM Group is one of the most strongest leading financial brokerage for CFD trading services. We have physical offices that you can visit for training and trading, opening a trading account. We are present in UAE, Kuwait, Jordan, Turkey as well. So this is a very brief and short introduction. Today, my job in today's webinar is not only to introduce our products and services, but to give you value. All right. Time is more valuable than money. You can always have more money, but unfortunately, you cannot have more time. If somebody asks you to buy a meal or hang out or have fun together for an hour or two, it's totally fine. We are living in Middle East, most of us. It's not a big issue. But if somebody asks you to spend 24 hours with them, that is something that you would have to consider multiple times. So time is more valuable than money. With that being said, today's presentation, if I do formally, it can finish in 20 minutes. And I always say this in the beginning of my every webinar. If you really want to learn something and you want to improve your trading experience and you want to be strong at it, the webinar can take more than 40 minutes or 45 minutes. So let me know in the chat box that how do you want me to present? Shall I go formally, or you want me to take my time and explain you everything? And the best part, the webinar is not going to end without answering your questions. I have muted everyone for now temporarily, but when the webinar ends, we are going to allow everybody to ask questions. You can raise your hand in Zoom. There's a section of React. In the React section, there's a hand raise. You can raise your hand and I will unmute you and you can ask your questions, all right? So let's start. Let's share the presentation and let me know if you can see the presentation as well. So let's get started. Can everybody see my screen? All right. So welcome once again. So this is our subject. Our subject today, this is level 1, master the art of trend trading with moving averages. If you don't know what are moving averages, we are going to tell you, but a quick disclaimer, please take your time to read it. Financial trading is risky. Please make sure you know your risk. Do not invest your hard-earned money. Investment is money that you can afford to lose. Do not invest your children's education money, your mortgage payments, your car payments, your credit card payments. Don't do that. Only invest what you can afford to lose. So a quick disclaimer. So these are our topic. Maybe you already have some experience and you have the basics. Do we have anybody here today with us who doesn't have any experience? Can you let me know in the chat box? How is your experience? So I will move accordingly. Is everybody well aware of trading? So we're going to study today. We're just going to talk about what are financial markets, what's online trading, what is a regulated broker, why it's important. Then we'll move to the important part, which is the trading strategy. We'll give you a technique. You can use the technique. You can also download a demo account and practice on it. Okay. First of all, what is trading? If you want to write it down, write it down. Online trading is just like any other business. Trading is nothing more than an act of buying and selling. Trading is nothing more than act of buying and selling. You know, when you want to go shopping, always there's a specific market or specific area, specific block, specific center for specific services. If you want to get your car repaired, there is a separate city or a location where there is business of car services like spare parts, garages, workshops, etc. You want to buy dry fruits, you want to do grocery shopping for your family. There are different places, allocated places. You want to buy stuff, you want to hang out with friends. There are malls in designated areas. You want to go for a walk. There are parks, etc., etc. So anything, financial products, they are also known as financial derivatives. Financial derivatives have additional branch of called trading instruments. Okay, things of higher value and large quantities and bulks are traded in exchange markets. So we're going to learn how many types of financial markets are there. First market is the forex market. Forex stands for foreign exchange. It's a place where leading well-known currencies are traded. That's what forex is. Second markets are the energies market. What's an energy market? It's a place where things like crude oil, Brent oil, natural gas is traded. Then we have an exciting and most lovable market, that is the precious metals. And in precious metals, we've got gold, silver, platinum, palladium, copper, etc. Then you've got cryptocurrencies. Everyone's aware of Bitcoin. Everyone's aware of Ethereum. Then we've got index markets. Equity markets are the share markets where well-known shares are traded. For example, Microsoft, Google, Amazon, Tesla. The best part is the technique, the method that you're going to learn today, it is applicable on anything you wish to trade. It's universally applicable on any financial trading product you choose. Okay. Now, before you enter into the world of trading, it is always recommended you go with a regulated broker. So we're going to read from the slide and I'm going to explain you what a regulated broker is and what's the difference between regulated and non-regulated broker. Yeah, important point. What is a regulator? Regulator is actually a local body, local entity within the country where there is business license to offer trading services. This is government body. They observe and they audit financial services provider that they are hosting their transactions and operations fairly and smoothly. Trading with a regulated broker protects your hard-earned money. I am very sure many of us, we receive almost daily or weekly calls from companies that we don't know when they were established, what kind of business license they have, do they really exist, how they are handling your funds, are the funds secure, So it's very dangerous and risky to trade with non-regulated brokers. So regulated brokers, they operate under strict rules, ensuring your funds are segregated and you're less likely to be scammed by a platform. Just for your knowledge, for example, if this is a company, okay, if this is a company, the company must have, in a regulated environment, they must have 2 bank accounts. Why they have 2 bank accounts? One of them is their own funds, company's own funds for their funding their operations, employee salaries, office rents, etc. Second is client accounts. In client accounts, they are separate from the company accounts, and the client account is secure and safe. So God forbid if something ever happened to the company, okay, that it does not affect the client funds at all. So I hope this part is clear. Can you please say if this is clear? Can you say in the chat box clear? So I would know you're attentive. I do understand Kuwait has a public holiday today and it's night. Everybody wants to spend time with their family. So thank you so much for your attendance and participation today. So Mr. Al-Hussein has said it's clear, and I hope the other members don't feel shy. And please feel free to communicate. Let's keep it engaged. Now, NCM Group, these are our offices. In UAE, we are well regulated by ESCA under Category 1 license. In Kuwait, we are regulated by Capital Market Authority. We've got office in Turkey as well, and Lebanon, and also in Jordan. So what's the difference between regulated and non-regulated? We've already discussed this, but it's good to read from the slide. Regulated brokers follow government rules. This means their funds are usually held in securely. If there is any problem, if there's any issue, if there's any dispute, if anything goes wrong, you can always get it resolved at earliest. Unregulated brokers don't have such oversight. It puts your money at risk. So before you enter the world of trading, there are some basic requirements. Some basic. You need a trading platform called MetaTrader 5. It's one of the best trading platforms offered by NCM Groups. It's available globally. There are no hidden fees, hidden charges, inactivity charges. It's user-friendly and available in multiple languages: English, Arabic, Hindi, etc. There's more than 25 languages. Tablet, but as a beginner, it would be best practice to have a computer, Windows, laptop, or desktop version. The reason is there are advanced features to make your trading life easy and observable. You can observe good things. You do need a laptop. I hope I didn't get disconnected. Okay, so you do need a laptop, because computer has additional features, whereas mobile version is also very good. It's very user friendly, but in a mobile version, you have limited features. You need something called a demo account. What is a demo account? Demo account is a practice account where the trading environment is real, the markets are real, they work in real time, but the money is fake money, just like how you play a Monopoly game. The money is fake, so you can practice and trade, and when you have confidence, you can move to the real account. Now, demo account, you can also choose the deposit. So always when you open an account, at least make a fake or practice money, test money equal to the money that you're willing to invest in future. Okay. Now, let's go to the technical part. The first part, I always divide my presentation and teaching into 3 parts. First one is the theoretical part. Second is the technical part. Then I've got the practical part. Okay. So I hope everyone's ready. Now, what is technical indicator? Now I'm going to go off the official slides. I'm not going to go through official slides right now. Okay. So let's talk. Please write this definition down. What are technical indicators? Technical indicators are built-in tools. Technical indicators are built-in tools within the trading platform. Technical indicators are built-in tools within the trading platform. Full stop. Their purpose is to help and assist and guide the trader in understanding what is the trend in the market. Technical indicators, they help you in understanding what is the trend in the market, and they help in entry and exits. And they help in entry and exits. Okay. So I hope it's clear. Now, I'm going to share my screen again. This is the website, ncmfinancials.com. Please visit this website, ncmfinancials.com. And when you go there, on the right-hand side, you will see download MetaTrader 5. So you can download the MetaTrader 5 on your PC. After you download the platform, I'm not going to teach the platform today. Our webinar is not about the platform. We're going to go directly to the MetaTrader 5. This is how MetaTrader 5 platform looks like. Okay. So you've heard the saying called trend is your friend. What do we mean by trend? When the market is moving in a specific direction. there are three kinds of trends. You may have heard of them before. You have something called an uptrend. You have something called a downtrend. Then you have something called a sideways range. This is a non-trending market, all right? This is a non-trending market, and this is an uptrend, and this is the low trend. In an uptrend, you have a high here. Can you see this? You've got a high, and when you have 2-3 highs, each new high is higher than the previous one, then we can say the market is an uptrend. Please write on paper trading strategy. Write on paper trading strategy. Please note that this webinar is for educational and information purposes only. You are solely responsible on how you use the information that will be given to you in today's class. Okay, so write trading strategy plan. Okay, now trading plan. Okay, requirements. I'll write it. I'll dictate it to you. Just write it down. Okay, never ever trade in a non-trending environment. So let's talk about this. This is something we've got a high, then we have something called a higher high, HH. We've got multiple higher highs. When we have these kind of higher highs, it means the market is an uptrend. These lows that are forming are called higher lows because each low that is being formed is higher than the previous one. When we have higher highs and higher lows, it means the markets are in an uptrend. And when we have a low and we have multiple lower lows, and we have a lower high, each high is lower than the previous one, it means the market is in a downtrend. In a sideways range, there is no consistency in higher highs and lower lows. The market is stagnant, it is flat, it is straight. Okay, so we've covered, now we've discussed what is a trend, how a trend looks like, or how to identify a trend. In your trading plan, you can write to identify the trend for short-term trading. You can use the 1 hour chart. You can use the 1 hour chart to identify trend for short-term trading. For medium-term trading, you can move to the 4 hour chart. For long-term trading, you can go to the daily chart. There are 3 types of trading styles. Day trading, first one is called scalping. Scalping is a trading technique. It's a trading method where the traders finalize and close their positions in less than 15 to 10 minutes, sometimes maybe in a minute or 2 or some seconds. That's what scalping is. Day trading is a trading style in which the traders finalize their trades, conclude their trades within the trading day or within 24 hours. Swing trading is a type of trading style where traders hold their positions from hours to 3 to 6 weeks. That's what swing trading is. They let the market swing. They let the market move. They want to be part of the whole trend. Position trading is a type of trading in which traders have huge positions, but mainly less than 3 positions, and they hold the positions from 6 to 12 months. That's what position trading is. So we've discussed so far what is trend, how to identify a trend, and we'll use the chart as well. And we've discussed the trading styles. All right. So in your trading plan, you can write for demo, for practicing on demo, open a $1,000 account. Lot size will be 0.01. You can write for demo practice. 0.01 is going to be your lot size. You will use 1 hour time frame for the direction of trend and 5 minutes chart for entry and exits. Okay. Now let's fix the chart. First of all, I'm going to take a pause as well. Right click properties. Your chart colors should look like this. You can take a screenshot. You can take a screenshot and color your charts accordingly. You can color the charts accordingly. Just take a screenshot. I'm going to count till 5. 1, 2, 3, 4, and 5. After you've colored your charts, this is how you see the candle. Go to Insert, Indicators, and Trend. Then you will select Moving Average. You can take a screenshot again. We will do this step 2 times. Click on the Moving Average. 15 exponential and yellow. You can take a screenshot again. You need 2 indicators. Now in your trading plan, you can write required technical indicators. Write in your trading plan, required technical indicators, 50, 15, and 30 exponential moving averages. So these are the settings. I'll hit the OK button, then I'll go back, Insert, Indicators, Trend, Moving Average, and I'm gonna write here 30, and I will go here and I'll maybe color it differently. I prefer hot pink. So we have these 2 moving averages. This is the navigator section. This is the navigator section. This is the market watch, and this is the toolbox. I'm going to hide all of them so that the chart looks clear. Is the chart clear, everyone? Can you see the chart? Can you please see the chart? Can you please confirm in the chat box, is the chart clear? Thank you, Mr. Akram. Thanks for confirming. Okay. Now, trading strategy, right below trading strategy, classical crossover. What is a classical crossover? Now we are looking at the gold chart here. This is a 1 hour chart. 1 hour chart can be used for identifying the direction. Okay. Now, here's the trick. Let's suppose this blue line is the moving average. If the prices are above the moving average, it means the market is in an uptrend. If the prices are below the moving average, it means the market is in a downtrend. Okay? If the prices are above the moving average, it's an uptrend. If it's below the moving average, it means it's a downtrend. Okay? So one moving average, it can help you in so your first problem is solved. First problem is how to know the trend. What's the trend? How's the market behaving? You can know from your moving averages. Now, the best part is how to enter. You've identified the trend. You understand the trend. You've managed to find what's the direction of the market. Now, if you want to start trading, you have a double moving average, and the first strategy is called classical crossover. When you have the 15 moving average crossing above the pink line and they fan out, there's a distance. Like you've got here, you've got 2 moving averages. There's a crossover. There should be some gap, decent gap between these moving averages. And you have green candles forming. This is called a classical buy cross. Some people call it golden cross. This means this cutting of the moving averages. This cutting of the moving averages here, it means the market is trying to shift its trend. The trend is going to change. And when you see a decent gap like this one, it means this is now your trigger or entry to take a buy. And when you will exit at the opposite cross, like here, this is your buy signal approximately. This is a bad one example. And when the moving averages cross properly, you will exit your buy. This again here is a buy signal. And when you see it's making an opposite cross, you will exit your buy. This is the most simplest and easiest trading strategy. But since this is, you can use a single chart as well. You can use a single chart, and you can also switch to, if you see it's an uptrend, when you see, now you see the prices, they're above the moving averages, right? Here, they're above the moving averages. They have been above the moving averages. So what we could do here, we can move to a 5 minutes chart. I can use this tool. I can know from here that the price after this red line has been an uptrend. So if you go to 5 minutes chart, disable auto scroll from there. See, this is the 5 minutes chart. This is going to be, you have to trade in the direction of trend. Whenever you see a proper buy cross, you take a buy, and when you see a sell cross, you would exit. You know, you would avoid short selling. What is short selling? Short selling is the opposite of buy. You make money from the fall. I'm expecting everybody know what short selling is. If you don't know, you can do your homework. You can do your own research and check what short selling is. Okay, so this is your exit. Again, you've got a buy here, you've got your exit here. You've got a buy around here, around this level, and let's move further. And this buy, if you exited here, or even if you entered here or entered late, it gave you a decent move towards the upward direction. Okay, so is this method clear? Is this method clear? You can see there were multiple opportunities. So we've just discussed the entries. Right now, we will also discuss risk management. It is usually said you should not invest, or you shouldn't trade with more than 2% of your account balance. 2% is max. You can even go for 0.05% risk. When you take an entry, for example, here you have a buy cross. If you took an entry here, use the previous swing low for your stop loss. You can even use this low, or you can even use this low. Okay, now here's the gap, and target 2 times your take profit. So when you took a buy, your take profit of 2 times would be around this area. It got hit. Okay, so here you have a buy cross. This one, you have a buy cross here. Where is the swing low? Slightly, this is the lowest point. Slightly below this low, you would keep your stop loss, and the target would be around somewhere 2 times your 2 times your stop loss. Same example around here. If you've covered this one, here also you have a buy cross around this area. If you would have entered, here would be your stop loss, and this target is huge. It got maybe fixed later on. The target was hit. So what have we discussed? The first trend trading strategy is a classical moving average crossover. How to enter, we've discussed that. How to exit, we've discussed that. Then we've discussed how to put a stop loss and how to put a take profit. If you're risking $10, you're targeting for $20, you need very less, maybe 37% winning trades out of 100 to make out, or from 50, you need around 16, 70. You can just do the math. So is this method and strategy clear? So if it's clear, I can move to the other one. If you have questions, you can ask. I will unmute you. If you want to come over the mic, ask question. I will support, and no question is a bad or poor question. Every question is welcome. Yes, Mr. Al-Hussein, I have unmuted you. I believe you have a question. Do you want to ask something? You can unmute yourself. Any questions so far? All good. Okay. Oh, I am so sorry. Until where did you hear me? Until where did you hear me? Let's start again. Okay, let's start again. I am so sorry. The mic, I don't know, to disabled. Okay, okay, again. No problem. No problem. We'll do it again. All right, everyone. This is the second strategy. First strategy, the second strategy, we added three exponential moving averages, 50, 100, and 200 moving averages. This is also one of the best settings. You can use them on the 5 minutes chart, and you can use a classical crossover strategy, how we discussed. I'm looking for the drawing. Where are, yeah, here. See, you've got a buy cross around this area, and then you have a cross. These settings are slow settings, but they will give you big moves. They'll give you the trend to catch. Since moving averages are technical indicators that are used for trend trading. Okay, so here you can use classical crossovers as well. Simple. This is your first strategy, the first technique that we discussed. Now we are going to go into the advanced methods. And here is your sell cross, and here is your buy cross. This one's simple. Now we are going to talk about pullbacks. We are going to talk about the pullbacks. What you have to do here, okay, this distance, this gap between these moving averages, you can see them, these moving averages, they're creating a distance. This space between these bands, moving averages, whatever you want to call them, you can even call them magic lines. This is the decision cloud, trading decision cloud or trading decision zone. For buy opportunities, what you have to do, you have to wait for the market to go up, get pulled back in. Now we're talking about the buy setup. Let it get pulled back in within the trading cloud. When it gets out of this cloud, the first green candle that closes, that will be your buy entry. That would be your trigger to enter the markets. And the stop loss is going to be below your 200 moving average, and the target has to be 2 times. Here again, it went back up, it got pulled back in, it closed above it. Here is the stop loss, here is your entry, and the target would be 2 times. All right. Here again, market went back up, it's got pulled back in. This is your entry. Green candle closes above. At the red moving average, 200 moving average would be your take profit, and 200, you will have the target 2 times. So is the buy setup clear? Hello? Can everybody hear me? Can you all hear me? Sorry, I don't know, maybe there's some technical issues going on with Zoom. I want to know if everyone can hear me. Can you all hear me? Thank you. Thank you. So is the buy setup clear? Now we will discuss for short selling. If you want to short sell, and if the market is in a downtrend, here, now the market has gone in the downtrend. Okay, here's a crossover. Market goes down. It's get pulled back in within the space between the moving averages. When a red candle closes, this would be your short entry. Above this here on the 200 moving average, this would be your stop loss, and the target will be 2 times. Here again, you have another example. Here. At the lows, this is your, here the market gets pulled back in. Here the market got pulled back. Red candle closes below. You'll put your stop loss at 200 moving average, and your target will be 2 times. It got hit as well. Bam, bam, bam. So this is another trend trading strategy. But you have to keep in mind, this one will work when the market is trending, when you have higher highs and lower lows. But when you have a sideways market or a stagnant market, when there's no trend, here is something that trades will get, you'll hit your stop losses and you would lose in the sideways market, but when the market catches the trend, you can recover. Try to trade with at least 1 to 2 risk reward ratio. I'm going to share you something on the PowerPoint. Please watch this. Thank you, Mr. Akram. Please watch this. If you're trading with 1-to-1 risk reward ratio, let's suppose you're risking $10 to earn $10, you need to be successful with 51%. If you are trading with 1-to-2 risk reward ratio, you only need 34% of success rate. If you're trading with 1-to-3 risk reward, you need 26% success rate. It is recommended to go for the second and third option, 1-to-2 and 1-to-3 risk reward ratio. So everybody, I hope you found value today. I hope we were able to deliver value. If you want to know more, if you want to learn more, if you want advanced classes, just contact our office to schedule a session. Once you become our client, once you open an account, you're eligible for advanced training as well. If you have any questions before we end the sessions, please let me know. I will not close the session and I'm not going to hurry. So please, do you have any questions? Did you learn something of value today? Do you think what we covered today is going to help you in improving your trading journey? Thank you. Was it simple? Was it easy? Was it simple? We didn't complicate the charts. Mr. Akram, okay, sure. I'm going to unmute you. Yes, Mr. Akram, go ahead.
Hello. Thank you. It was a nice explanation, and it is short but okay, because I am also involved in trading. Some other, not a forex or others. I'm in crypto, and I have been gathering the knowledge. Okay, so this is really helpful for me. It is very short, but as you said, we need to get the subscription or become a member for your platform. So just explain about that. Okay, thank you so much.
Yeah, Mr. Akram, no problem. You're more than welcome. What's required for advanced trainings or one-to-one sessions is you just contact or visit the company if you want to go. What you have to do is just open a trading account with them, complete their formalities, and you can request them to arrange a one-to-one session with me.
Okay, okay. What's your good name?
My name is Mahsin Khan. I'm the head of learning and education in NCM Academy. It's an educational wing and institute for NCM Group.
Okay. Thank you, Mr. Khan. Thank you so much.
Thank you, Mr. Akram. Great, great. Yes, Mr. Omar, you're going to get the recording. It's going to be on our YouTube channel. Just go to YouTube and type NCM space Academy, NCM Academy. All right, everyone. Thank you so much. Thank you for your presence and participation. That's all from my side. And we wish you a lot of success with your trading journey. And we even look forward to be our client. We do host in-house workshops as well, and we also host seminars in Middle East. So make sure you follow us on our social media channels. And that's it. Good luck. Take care. Have a great evening, and bye-bye for now.